Man, I'm back with another great video for you guys today. In today's video, I'm going to show you guys how to read the liquidity in Forex. All right. My hope by the end of this video, you'll have a better understanding what liquidity is and how the banks and the institutions really trade in these markets. So without further ado, let's jump straight into it. Be thinking, what is the liquidity in the market, or where is the liquidity in the market for that matter? And a very easy way to look at this is to think in terms of the big banks or the institutions, right? When you come to the market, you want to ask yourself as a big hedge fund investor, where are most likely the orders are, the resting orders are, or the pending orders are, right? And with retail knowledge, this is where it comes to assist you in smart money concepts, okay? What all I mean is where the pending orders are, like the pending sell stops or the pending buy stops. And when you're taught retail strategies, especially like breakout strategies, you're taught typically when it breaks that high, you buy. When it breaks the low, you sell for your sell stop, and vice versa. When it breaks the high, you place your buy stop, and there you go, right? So you know what a buy stop and a sell stop is. So for instance, like let's say for instance this particular classic support and resistance, right? So right here, you're taught this is support, right? You typically, you could buy at support, it comes, it buys, but also what's resting here, not only are the people who are buying at support below this area or below this support zone, right? You have people who have resting sell stops in these areas, right? So they'll have they'll have sell stops here because retail logic says, oh, you can, soon as price breaks here, you'll go ahead and have your sell stops there, and you go. So what happens is this institutional move right here, this is an institutional move. This is a big bank move. Us as retail traders, we cannot move the market this way. So they know this. They know there's sell stops there, right? And so that's AKA liquidity in the market, right? And so they come here, and so you get everybody, the support guys, they're buying up, right? They're buying up. So what happens? The market makers, they come and they shoot it down. They shoot it down. They take price below. They take price here. They activate those sell stops. But what does it also do? It takes out the guys who bought here at support. So they're stopped out. They engineered liquidity in the marketplace by this move right here. You have these people who bought up here. They're holding positions. They're not worried, right? You got more people coming in, taking more buy positions, right? You got the guys here that's waiting for price to dump low, right? And they get activated. They get stopped out. The guys who are holding buys up here, they get stopped out. These guys, these breakout artists, they get activated. They're excited momentarily because they're like, holy shit, I'm in the game. And then what do? Whoop, they swing it back up, right? Now, at the same time, these people who place the sell stops, where do you think their stop loss is? Stop loss is typically going to be above the highs. Let's just call it, this is a monthly chart, but let's just say their stops are up here, right? And obviously, we're on a monthly chart. These are like more long-term traders, right? And price is fractal. So when you go down to the 15-minute charts, you see the same setups. But let's not think of the time frame. Let's just look at where logic would be if these guys have activated, we know that the buyers here, the guys who were buying support, their stop losses were pretty much where the guys had their sell stops, right? So I should put that here. Sell stops here, / long stop losses, right, are resting here. So they get stopped out. They get the shorter, the guys that are going short, they get activated, and then price comes up and takes out the guys who are short. Now they're trapped. They're trapped on this move, right? They still have hope, and price is still moving up, Their stop losses are here. Some guys are already closing out of there. They're closing out. They're helping the market makers. They're helping the big banks engineer liquidity by they're closing out their positions, rightfully so, because you read it completely wrong. All right. And so now here you got, short position holders. You got their stop loss right here, right? Those guys who got activated down there, now they are getting stopped out, okay? They're getting stopped out. So now they're stopped out, okay? Now what is this also doing, right? You have guys that buy at support, but they also they buy the breakout of resistance, just like we're taught, right? So this is how you combine retail knowledge, right, with smart money concepts. You just think of the opposite, right? That's the easiest way I can put it. You just think of the opposite of what retail is doing. Like, take what they have and use it against the retail market. All right. So as you can see here, these people get stopped out. All right. So now you have all of this. This is also considered sell side liquidity. Buy side liquidity. This is considered buy side liquidity because you got the people who are going to buy as prices going up, right? So, this would be considered resistance turn support. Now guys are like, oh man, it's going to go up, right? Just like these guys here, they bought down that support. You got the guys that's going to buy on the breakout, and then you got the guys that's going to wait for the retest, and it's going to come back up. And what's going to happen? So they buy up, and then boom, what do the market makers do? They immediately shoot it down, stop these guys out, because their stop losses, once again, your eyes go here. Like, you're just thinking of logical areas, right? Logical areas of what we've been taught as retail traders, right? So if you know you're getting up here, right, you know that your stop loss is going to be around here. So this is creating sell side liquidity. All right, this is creating sell side liquidity. And excuse my misspellings if I am misspelling. I'm trying to make this video nice, short, and sweet to the point so you can understand it. So you got buy side liquidity. They take out the buyers once again, right? They take out the buyers again. They take the market out, and they get stopped out. And this repeats itself over and over and over and over again. So I encourage you to go through your charts, look at this for yourself. Just look at traditional retail support and resistance, and then look at how the purge happens, right? And you'll see that is liquidity being engineered in the marketplace. And that's the simplest way I can put it. So when you're looking at resistance, think of that as sell side When you're thinking of resistance, think of that as buy side liquidity. When you're looking at support, look at that as sell side liquidity. All right. So in the next video, I'll get a little bit more advanced. I just want to give you a quick basic introduction to what is liquidity and how you can use it. Till next time.